Hello, good evening. It's Adil Fazal here, market analyst at CFDs.com. Please be sure to visit www.cfds.com, a leading spread specialist in spread betting and CFD brokerage. Alternatively, visit the educational website where I post my charts and analysis daily. Okay, let's try and decipher exactly what's happening with regards to this market and in terms of the market moves. My bias at present is currently bearish, and I'll soon explain why, and I'll elaborate as to today's price action as well. Basically, it's been nothing short of a short squeeze. Nothing short of a short squeeze. I think that's probably the title of today's video as well. Okay, nothing short of a short squeeze. The reason why I say that is because, first of all, we had the Asian markets higher overnight, as we've already explained in the morning market video. And then we had economic data out as well. In terms of the risk on bias, obviously Asian markets higher overnight. Greece steel obviously reached. Certainly EasyJet earnings stronger, British Land stronger, Smiths Group stronger. Basically, we had expectations index from the German economy stronger, although the Eurozone was weaker. Now, Walmart, Home Depot stronger, US manufacturing data now. That's obviously colliding with the bearish factors. Now, the bearish factors were the fact that we had French terrorism attacks obviously still in the background, and the concerns with regards to that travel and leisure. Obviously, sector certainly being hit hard. Enterprise Inns was down today. Auto sales, European auto sales weaker, with the Volkswagen emission scandal getting worse because it included several more vehicles within that as well. So therefore, it's a risk-off scenario. Current ZEW, obviously with regards to German, that certainly came out weaker than expected. Eurozone ZEW certainly bearish. Inflation data yesterday came out slightly stronger, so therefore supported a rate rise. So not a rate rise, should I say, but basically counter-argued the effect of QE. Given the fact that European markets have obviously rallied and have retraced more than 75% of the high prior to the sell-off, that's pretty impressive. Okay, that's very impressive. And now that's why I said the title of the video should be nothing short of a short squeeze. Higher UK inflation as well, even with inflation data coming out today, still the FTSE has failed to sell off. Higher US inflation data, rate hike concerns certainly is on the horizon, and therefore the dollar has failed to rally, and the actual US markets have failed to sell off as well. So interesting scenario. Interesting scenario nevertheless. Okay, so that's the rundown of all the economic news flow, etc., and really the bias in terms of the market itself. Now, why do I say that the market is certainly due for a potential pullback at this juncture? Now, the argument that I'm going to put forward is based on the Euro USD. So if I just bring up the chart of the Euro USD, and also a chart of the dollar as well, so bear with me. So Euro USD, okay, so this is a 10-minute chart of the Euro USD. You can see that we are trying to project higher from this 1.063 level. The 60-minute chart has this falling or expanding wedge pattern. So again, this is a potential for a short squeeze higher. Okay, a 4-hour chart certainly has lower lows and lower highs, and we are trying itself. It is potential bottoming tail forming, but again, we need to give it more time. Daily chart has multiple levels of support below, so anywhere in this zone we are looking at potential support. Alternatively, if you look at the 1 weekly chart as well, you can see that the market certainly has discounted a lot of the potential easing from Draghi. So the expectation, like I said, is all about easing, and given the fact that the actual French terrorist attacks occurred, everybody expects, or this is a philosophy or theory at present, that Mr. Draghi has no other choice now but to do QE. Now that may well be unfounded, especially with the inflation data yesterday. And not only that side of the equation, the side of the equation is the dollar side of the equation. Now, if I bring up the chart of the US dollar and I bring up a daily chart of the dollar index, you can see even with the weaker even with the stronger inflation readings today, the core inflation, we still failed to move higher in the dollar. So that means that the dollar has certainly priced in everything now. Also, given the fact that terrorism concerns have dissipated as well, that's another factor as well. Given the fact that terrorism concerns have dissipated, as you can see, European equities are trading stellar. Then that means that the dollar side of the equation certainly loses its potency, and therefore the dollar will certainly start to be weak, and that's exactly what we are potentially seeing now. And that will obviously cause the dollar, if the dollar starts to weaken, then that will obviously cause the euro to strengthen. So can you see how I'm trying to merge the two together? Now, I can't bring up a chart of the Euro JPY here, nor can I bring up the chart of the Euro CHF or the Euro GBP. But if you were to bring those daily charts up, you'll see that those daily charts are indicating support for the euro. The Euro JPY is into support, Euro CHF is into support, Euro GBP is into support, and therefore that would give thesis or give credence to a potential rally in the euro. and thereby obviously by default that will cause the dollar to fall. Okay, now the whole market has been attached to the euro, and it's all about the euro USD, and the whole rally really itself has been based on the euro. Okay, now given the fact that we did get weaker US data today, although the inflation reading or core inflation readings were certainly better, then one would certainly, given the fact that industrial production was weaker than expected, the Redbook's data came in line, but the core consumer price data came out better than expected. So therefore, that certainly strengthens the case for a potential rate hike. And rate hike concerns, as we all know, are bearish for the market. Okay. Now, the other two factors as well is the Nasdaq. The Nasdaq is now into gap fill resistance on the daily chart. So therefore, you are looking at resistance in the markets in general. Okay. And then you're looking at the S&P 500. Now, looking at the S&P 500 on a 60-minute chart, you can see that we're clearly into resistance. Okay. The S&P 500 is certainly into resistance on the 60-minute chart. The 10-minute chart itself, you have broken out this bullish trend line or bullish channel. So therefore, you are looking at bearish price action. And if we go to the daily chart, you can see that we are slamming into the 200 MA and into that diagonal trend line resistance. So if the S&P is into resistance, then you can certainly rest assured that the rest of the market will certainly be into resistance as well. And that will cause weakness in the rest of the market. So we are looking at a potentially risk-off scenario here. Okay. Now, bringing up the chart of the European indices, given the fact that we looked at fundamentals, let's bring up the chart of DAX first and foremost. Okay, so let's try and decide for the German DAX first of all. The daily chart itself, very, very impressive, revisiting those highs again. Okay, the highs that we had prior to the French sell-off. Okay, so we're revisiting those highs again. Interesting scenario. Okay. Very, very interesting scenario here. So we're revisiting those highs. Again, we're revisiting this key diagonal trend line on the daily chart. So again, watch out for that. The unfilled gap at the 11,300 obviously still remains open. But given the fact that the dollar now is certainly weak, and the euro side of the equation, the argument that I've put forward, and the whole market trades inverse to the euro, therefore you are looking at weakness in the German market at this current juncture. Now, looking at a 60-minute chart, you can see that the thrust higher has been very, very impressive. Very impressive. We've retraced more than 75%, let alone 75%. We've almost retraced 100% post Paris attack, chaos and sell-off. Okay, so I did expect this gap to close below at 10,500. We failed, and interesting. Just shows the strength and resilience of the DAX, really, if anything else. Okay, so everybody must be expecting this QE from Draghi. That's all I can. The only thing I could pin it down to. That's the only thing that I could, given the fact that you have terrorism concerns. I mean, every trader knows that when you have geopolitical concerns, it equals risk off, and therefore flight to the dollar. And that certainly does obviously depress commodities, and obviously CHF, JPY get bid, bond market gets bid, etc. So. But, as always, geopolitics should, or socioeconomic concerns should, in theory, negate QE. But this QE certainly is so potent that even then markets or traders or participants are failing to see that. Now, the only thing I can also attribute it to is the fact that because the trade is so blatantly short post-terrorism concerns, obviously after Paris, it certainly seems to be feeding the short squeeze. I think there's too many shorts in this market post France, and it certainly is triggering those. That's all anything I can explain. The QE trade certainly is bringing in buyers and knocking out the shorts, and any rally really based on a short squeeze, it doesn't really last. Let's put it that way. Okay, it certainly is weak and it's feeble, and it generally tends to evaporate very quickly, especially given the fact that we have an unfilled gap on the German DAX now at this region. Let's just pinpoint this region. It's 10,712. Okay. So we still have an unfilled gap at 10,712 that needs to be closed. So interesting days ahead, or interesting price action ahead. Okay, 10-minute chart on the German DAX. You have resistance here, which we negated at 10,960. So they certainly flew through that, as seems to be the case every single time. It tends to negate all resistance zones. Okay, we have resistance at 10,995 now, and that certainly is the key, and that will be the pivot. Okay, in this market in terms of price action. But again, be aware that you do have an unfilled gap at 10,715 that needs to close. So the risk off certainly is not over in this market. Again, terrorism concerns will still dominate, and we are going to get a risk off scenario. Now, the funny thing is as well with regards to the euro, it's become a safe haven currency. So whenever you have risk off, you'll generally see the euro rallying, and the euro rally will take the Kiwi and the Aussie higher with it as well. Just if you are I mean, I trade based on intermarket analysis, so I'm looking at commodities, I'm looking at bond market. I trade based on Mr. Murphy's work of intermarket analysis. So it's interesting to notice exactly what's happening in other variables too. And that's one of the things that is happening at present. And the euro certainly seems to be intertwined or linked with this risk on, risk off scenario. So again, watch the euro. And based on my analysis in this video, I'm expecting the euro to certainly start to surge. And that will obviously lead to the dollar obviously collapsing. I'm actually long the Aussie dollar actually, because I'm short the rest of the indices and I don't want to take additional exposure. So I'll take advantage of the stronger euro via the stronger Aussie as well. Now the Aussie will benefit if the risk is obviously embraced either way. So certainly is a good hedge versus my short equity position at present. Okay. Now bringing up the chart of the MDAX, you can see here we had a substantial thrust higher after closing that gap. On the daily chart, you're looking at a 10-minute chart. You are into pivot R3 resistance, so therefore looking at severely oversold condition, overbought conditions, should I say? Okay, so again into this zone, can we retest the highs? That's a good question. Very unlikely, given the fact that you have terrorism concerns, etc., etc. So you should be seeing some sort of weakness coming into the German DAX based on the MDAX itself. But again, very, very impressive move. But again, bear in mind that you do have an unfilled gap below, and that gap must close. So therefore, you are looking at a potential gap fill scenario. Now, looking at the tech all share again on the daily chart, we are now back into resistance on the daily. So certainly keep a close eye on that. And you are looking at potential risk of scenario. 60-minute chart, you are looking at revisiting a double top scenario here intraday. So therefore, you are looking at weakness in terms of the all share. Again, be aware that you have this unfilled gap below. Going to a 10-minute chart, you clearly see the intraday double top pattern, and therefore indicating weakness. Previous support equals resistance over here too. And we have this gap to close below, which is over here in this zone. Okay, so certainly looking for weakness on the German DAX based on this double top pattern here. Now, as I speak, the markets are selling off. We're currently down to 45.80 on the Nasdaq. The CAC is now down to 4,900, so 4,920, and we are certainly seeing weakness. We are seeing the euro move higher by 20 pips, and the market certainly is feeling the pressure. Okay, so remember, unfilled gap below, German DAX weakness. Okay, let's move on to the CAC now. The CAC again, very, very impressive. The resiliency is unbelievable, truly unbelievable. And again, if I had this set up 100 times, folks, I'd take a short 100 times. But always remember, geopolitics trump QE effect any day. Okay, and according to the textbooks, that is, so we must adhere to the textbooks. Okay, now the loss of tourism and the loss in GDP, etc., will certainly continue to bite. Okay, so again, you can see this key trend line taken out, negated, and the next trend line that we're going to be focusing on is here now, and this is a key trend line that we are going to embrace. We are into that 4940 resistance zone, so again, that's going to be very, very important. In terms of resistance, you have this level of resistance up here. Again, you've taken out the 75% fib, which was, to my astonishment, I mean, it's very impressive. Very, very impressive, given the fact that you have terrorism concerns and loss of economic growth, and obviously tourism is a major factor in obviously Paris and France, and yet that's all been negated. I mean, it's very impressive. Very, very impressive. It shows you the power of QE, folks, okay? QE distorts price action, creates bubbles, and is ultimately no good at all. It just doesn't really serve any purpose at all. All it does is artificially inflates asset prices to what need? To what benefit? It's just ridiculous. Okay, so anyway, that's the way in which the market wants to understand it. That's the way we perceive it, so we trade as such. Okay, so 10-minute chart of the French CAC. Again, you have an unfilled gap here at 4946, so that certainly is a potential target on the upside. But again, like I said, based on my stronger euro situation or stronger euro setup, I am looking for weaker prices on the French CAC as well. Like I said, terrorism concerns will dominate, and reality needs to kick in here, and the French CAC certainly needs to start to move lower from my perspective. Okay, right. That certainly is the case in terms of the actual French CAC on a 10-minute chart. Now let's cross-reference that, cross-verify that with the CAC alternative indices. So let's look at the volatility index. You do have a potential bottoming tail on the daily chart. You can see here we've had a bottoming tail again on the French CAC, and this certainly wants to start to push higher. We do have an unfilled gap on the volatility index and the CAC, and again, that's certainly one level I would like to target as a trader. And I will maintain my short bias on the French equities. given the fact that you have terrorism concerns. Okay, right. Let's move on to the next alternative, CAC mid and small. Again, daily chart, very, very impressive. Very good move higher. Very impressive thrust. Okay, can it last? That's the question. Okay, it's taking out the diagonal trend line, but again, it's all about double top resistance. So intraday double top resistance on the French CAC. That's basically what we're observing and looking for a potential top and a U-turn. You do have an unfilled gap below that certainly needs to close, so therefore you are looking at potential bearish price action. Okay, now in terms of the alternative indices as well, CAC mid 60, which we've looked at, CAC mid and small we've looked at as well. Let's just bring this up quickly. Daily chart into the 200 MA, 60-minute chart. Again, intraday double top, 10-minute chart, you can see double top, and then obviously you have an unfilled gap. So certainly indicating weakness there. Okay, Euro stocks. Interesting, very, very interesting price action thus far. Again, coming into resistance and revisiting that key breakout level. Obviously, you have the inverted head and shoulders and the target being 3600, but terrorism concerns will dominate, like I said. I keep stressing, and we are looking for a potential thrust and a move lower. Okay, the diagonal trendline resistance has been taken out based on QE. FIB 75% has been taken out on QE. Hats off to the traders that were long. Okay, certainly a very impressive move. Nevertheless, okay. Now let's try and decipher exactly what's happening here, or what is going to happen here in terms of the market. So thus far, okay. So resistance seen at for 3460, 3470. These are all potential resistance zones and pivots. Okay, so looking for weakness there. Given the fact that we've taken out a FIB 75%, hats off to the bulls and certainly have to be respected. 10-minute chart on the Euro stocks again looks very, very overbought from my perspective. You did have a gap which we filled, and again, like I said, horizontal resistance is at 3460, and that certainly needs to be watched carefully. Okie dokie, right, and in terms of the rest of the market, let's have a look at the FTSE 100 now that we've covered it all the European indices as such. Now, daily chart of FTSE 100 is now slamming back into previous support equals resistance, and therefore you are looking at resistance at 36270. The 60-minute chart on the FTSE 100 is slam bang, crack, popple, call it what you want. We're back into that FIB 75% resistance, therefore you are looking at weakness on the FTSE 100. Now the 10-minute chart of the FTSE, we failed to really propel higher than the 6260, 6270, and therefore you are looking at potential weakness with an unfilled gap below. So therefore overall, summation, weakness, and the euro is certainly going to party and move higher, and is going to experience a short squeeze, and that will create a risk-off scenario. Again, terrorism concerns still dominate regardless. I mean, I know it's only been 2 days into the price action thus far, but again, you cannot ignore the loss of revenue and the loss of economic activity post the terror attack, regardless of the QE trade. Okay, I think that's a wrap. Goodbye, folks. Be sure to visit cfds.com for your trading needs. Goodbye.